Hello, hello. Buenos días, buenas tardes. Happy Saturday. Soy Belia Chavez, your trusted real estate agent here in Kansas City. And this morning me acompaña Tally. We're both bilingual, so today's little bit is going to be a little bit bilingual. So nos encontramos aquí at 3314 North 103rd Court, which is one of the open houses that I'm hosting today. And so I invited Tally to join me because Tally is a loan officer.
Okay,
so es prestamista hipotecaria Tally. Entonces la invité porque en mis previas open houses a veces hay muchas personas con muchas preguntas y dije, pues bueno, voy a invitar a Tally para que ella esté aquí presente y me ayude a contestar preguntas para las personas que necesitan ayuda para procesar su préstamo. Wait,
so
sorry.
I invited Tally to join me.
Okay, so for those of you who don't speak Spanish, Tally is joining me today here at the open house because I invited her since in previous open houses, sometimes I have people who come and they don't understand how the loan process works and they start asking me questions. So I thought maybe this time it's better that I have an expert. So I wanted to take advantage of Tally, and we're going to go ahead and create this little video so that if you guys have questions, you guys are free to jump on and comment and ask any questions that you may have. I'm going to go ahead and, because we're streaming this live on YouTube, so I'm trying to put it on Facebook. So you guys can either go to my YouTube page or here to my Facebook page, and we'll try to read the comments and be able to answer any questions. So Tally, para las personas que nunca han comprado casa, ¿cuál es el proceso? What do people need if someone has never bought a house? What do they need to qualify for a home loan?
Okay, primero, thank you, Belia, for inviting me to your open house and inviting me to explain the clients that come here. And in case they have any questions, they might already have something set up already, and that's why they come and see the house. But also, I'm here to assist in any questions for the financial lending world because it is very detailed, and you really have to be prepared to have less stress and make it faster, especially in today's market that is very demanding. So thank you, Bella, for allowing me to be here. Muchas gracias. Y aquí estoy para lo que se necesiten. Entonces, answering your question, what is it takes? You want to be prepared first before you start looking for a house, because you might fall in love in a house, and when it comes to applying, you want to make an offer, you already in your mind, because I went through that same situations back in the day when I was searching for a house. In my mind, I already, the school district is great, the shopping center is down the street, food and all that, and especially for the kids if you have little ones. So you want to be prepared before you even go to see the house. You want to see how's your finance and how's your credit score, how what your employer can impact on approval, how many hours you have to work, or what can your overtime, anything that you might have in with yourself and your partner. You want to be prepared. You want to know. So, and if you want to want to go on approval, seek your lender, Google for lenders, or just like come and see us at Central Bank. Central Bank has a variety of products that we can fit. So you want to get pre-approval. You want to see what your credit score is, because that's one of the biggest impact. It's not that it's going to give you an approval of how much money you can approve for, but it actually helps in case on rates, on approval, the programs, on insurance, mortgage insurance if it's involved. So you want to be prepared. You want to check on your credit. You also want to check on your stability of work employment as well. Mm-hmm. You want us to check how much can you approve for a house. So you want to provide at least the minimum most recent pay stubs. If you work, you get paid weekly, you need the most recent 4 pay stubs, or biweekly, the most recent. If you're self-employed, you want to have your 2 years of tax returns, and your W-2, so 1099s. If you're self-employed, you don't have a 1099, your tax returns and your business tax returns also works.
So for 1099, you only need 2 years.
2 years.
Okay, I
To
thought
the
it was
most
3.
recent.
Okay.
No. Well, it all depends on the program you want to fit, but 2 years.
So let's talk about that. There's different programs. There's different criteria. So there's different interest rates also for different programs, right?
Mm-hmm. Oh, yeah. There's different interest rates. So the programs, there's some multiple programs. There's programs that can help with grants. They can help for certain census tracts, like low and moderate income census tract. It doesn't mean there has to be a bad area.
Mhm.
It's just that census tract, low and moderate income. There's a lot of grants. A lot of lenders have those kind of grants, but there are also grants for different type of areas as well. That's loan programs. There's VA programs for military personnel or military spouses as well. So there's VA programs. There's a government programs. There's conventional. More the traditionals are more like conventional FHA and the government programs, but there are also rural programs too. If you look into for outside the city limits area, so there's different programs, and all those different programs that has different interests. You do, if you were seeking for grants, yeah, you're gonna get a program will have a little of interest rates are a little higher at times, not all the time. So because you're seeking for a grant, but then also there's some programs that if you're seeking for a grant, it doesn't matter. It's at what a market rate is. So it's just search about the programs and what you can fit. That also helps. Interest rates will help you on the amount you want to purchase a house too, and also the down payment. You do want to know how much down payment can you put. If there's a grant, just because you're a first-time home buyer doesn't mean you can't put. No, you don't have to put down payment. No, there's at times there's a grants they can help you with, but there's also it all depends on the scenarios. That you will have to put some down payment, even if you're a first-time home buyer. But there's a lot of help.
And one thing that I think it's important also to note is that there's programs that will take you with lower credit scores, like 640, whatever. I'm not sure what it is, but the higher your credit score is, the better the programs you can qualify for, correct?
Yes.
The better interest rate you can get. Yes, there's programs that'll get you with very low credit, but you want to have your credit score as high as possible to have the best options available.
You do have a good credit score. It opens a lot of doors as well. Interest rate and on the mortgage insurance or homeowners insurance. So it opens a lot of doors. So that if you want a specific rate, yes, you do have. If your credit is not improved, then yes, you have to improve your credit by paying some debts. Don't close credit cards, but just pay down those debts if you want to prepare by in a few months or in coming year. You want to look at see what your credit, but don't get disappointed that you can't because you don't have a good credit score. You can't do it. No, there's programs like FHA. There's times that can go 580 and above, and the interest rate it might be fluctuating. It all depends on the program, depends on the lender. But yes, you can do that. If you're seeking to buy a home now, don't discourage because you have to have a great interest rate. But we always encourage to
the higher it is. And it's important because I've had a recent buyer. We were working with a different lender, but this buyer had their credit score where they needed it. They got approved for one of the programs, and a week before we were going to close, their credit score dropped. And so that's something you have to keep in mind. Your credit score can fluctuate, so make sure you're not getting new lines of credit, that you're paying your current credit cards on time.
Don't buy a car in between the purchase of a home.
Right, don't buy a car because part of what you qualify for is based on how much debt you have, right? Yes. So if you have a lot of debt, so try to avoid buying cars, try to avoid buying furniture, try to avoid buying anything that will increase your debt ratio, right? Because then that's going to bring down how much you qualify for. Because if your income is $5,000 a month, but you have a car payment for $1,000, and then you have, you went and bought furniture, now you got a $500 payment on your furniture, and you got another car, so you got two cars paying $2,000, that takes away from your eligibility to get a bigger loan.
Your debt to income ratio, that's the most important, because it's even if you have 800 credit score, even if you got great credit score, but you have a lot of debts, and yes, that will give you an impact, because the lenders has some guidelines we had to follow, and we cannot get out of those guidelines. We had to base on that, because we don't want you to be in debt and also own a home, and then later on it's like, oh, I'm gonna give up. You know what? Screw this. I'm gonna just go ahead and get rid of my house because I can't afford that. I can't make this much, and this is stress. So as the lenders, that's the purpose we have those guidelines, because we want you to be a homeowner, but don't stress either, and don't just work for your house payment. So it is very important. Also, like, don't buy a car in between, don't buy furniture. We always encourage. We saying that for a purpose. We always encourage you to hold on all those purchases you have. I know it's just like I always put myself on your shoes. Always put my experience on your shoes. When I wanted to buy a house, I wanted to have all furniture, all new furniture. Why? Because it's my house. It's my first purchase. I was so excited, but my good lender at that time said, "Hold it. I know you want this. I want to, but we never know what's going to come. That you have to put extra money to your down payment, or don't use your credit, because it's the debt to income ratio is going to affect you. So just hold that until you sign and you get your kids back. You're like, all right, let's go.
Yeah.
Let's go to Nebraska
and have a reserve, because that's precisely what happened to one of my clients. Is that
sure helps.
They got approved for a down payment assistance program, right? And so they had $5,000 going towards their down payment assistance, but because they forgot to pay this amount, well, they paid it off, but I think there was like a little $1 balance under that didn't get taken care of, and it brought their credit score down like 50 points because it went on for like 2 months, because apparently like the charge came in after they made the payment. So this threw their credit score off. So now they lost their $5,000 grant they were going to get, and they were scrambling because they didn't have that money reserved. They didn't have that money put aside. So they had to scramble and call friends and relatives to try to put the money together so they wouldn't lose the house, because we were like a week away from closing. So it's important that up until the last day, you take good care of your credit, because the last thing you want to do is you're about to close and everything, the deal falls apart.
And continue to pay, even if you wait for a very long while to closing your loan for any reasons. Continue to pay your debts. Don't never stop. Even if they say, "Oh, the lender told me not to." I have heard this before. The lender told me to stop paying my credit cards because I needed that money. No lender is going to tell you to stop paying your debt. Continue to pay your debt. Continue to create that, to maintaining that good score when you apply with us. Just don't get any more debt. Yes, we might say, hey, we need you to pay this off at closing, so that way you can approve for the amount you're requesting or anything. But listen to us. Listen to the lender, what you need to do in your credit. But yes, maintaining your good credit score, maintaining to pay your credit cards, that's what you have to do.
Now I'm going to put my tax preparer hat on.
Yes.
I'm going to put my tax preparer hat on and tell you this. Because a lot of lenders, I'm not going to say any names, but it happens sometimes, lenders I don't even know, but I find out because my clients come back to me wanting to amend their taxes. It's like there's things that physically you can do. You can go and change anything you want in the world. But if you're modifying paperwork, your tax return, to reflect income that you did not earn just so you can qualify for a house, that is tax fraud. It's fraud. So Be very careful on the advice that you take from your lender. Do not let your lender advise you to go and change your income so you can qualify for a loan, because it is what you made. That's what you earned. That's the expenses you had. So if at the end of the year you only have $40,000 in profit from your 1099, don't go back and make it look like you had $100,000 and take away the expenses, because those expenses were real expenses. You wrote off expenses and that's what your real profit is. You could always take away the expenses and pretend like, oh, I didn't have these expenses. But guess what? If that's part of the expenses of running your business, your reality is you only made $40,000, and so you're going to be struggling 3-6 months down the road when that mortgage is coming in and your income is not enough to cover that mortgage payment. So when I help you buy a house, the last thing I want you to do is lose your house in 6 months. I want you to keep your house forever, or as long as you want to stay in it, by choice, not because you lost your money, not because you lost your house, because somebody told you to tweak the numbers in your favor to get a house, because that's not the right way to do things. It's not. The lenders need your information to see what you're eligible for. What do you really qualify for? Don't lie about your income.
Yeah.
It's fraud. You can say it how you want to say it, turn it around and say it, but at the end of the day, that's not how you do things.
And we're not tax advisors from the beginning, so I can't really say, oh well, how much do you think I had to I had to claim to qualify? I'm not going to tell you. I'm just going to what I'm going to tell you is to go back to your tax advisor. They the ones can, and it is true. I mean, it is fraud if you amend something just to get approval. Maybe you have to wait for the next year and how much you actually make in the following year, and be realistic in how much you make and how much you claim. I mean, I know no one wants to pay Uncle Sam. I mean, I don't want to, but I have to. So just be realistic on how much you making. And yes, the more you make, the more it shows on your tax returns. Yes, that will lead you to a good approval, but it's still.
But you can't have your cake and eat it too, because people are like, okay, well, I don't want to pay the IRS, so I'm going to put in all my expenses. So you don't want to pay money at the end of the year, but then you want to buy a house. Well, guess what? To qualify for the house, you have to pay taxes to show that you have income. So it's like you can't have them both. So you need to have that conversation with your tax preparer when you're sitting down at the tax office making the taxes and say, hey, I'm thinking about buying a house this year. Because me as your tax advisor, when you come do your taxes with me with my other hat on, I'm going to try to save you as much money so you don't owe the IRS, but with real valid legal expenses. So if I can take all those write-offs off for you, I'm going to take them for you. So, because I want you to have as little liability as possible. But me saving you that money is going to also have an impact on how much you're going to qualify for to buy a house. So if you do plan on buying a house, let your tax preparer know and say, hey, I know I have a lot of expenses. Right now you want to give me the most write-offs, but I also need to have my income to reflect. So I don't want to take all the possible write-offs this year. I don't want to take all my credits this year, because I want to show that I am having a profitable business that is sustainable. And then you could work that way. But if you don't let your tax preparer know, I want to buy a house, then we're going to go in and try to save you all the money that we can from the get-go.
And just be realistic on the expenses you do. Also be realistic in like if you like to go travel, you like to go to your hometown and things like that, you also have to be realistic on the purchase of the house. But I'm here to tell you what you need to do, on financial, what you need to have, what you need to provide. Also in the homeowners insurance too. Seek a homeowners insurance agent on getting a quote for the homeowners insurance agent, because it's very important. We know we want the extra stuff, but we just make sure we not have another.
So we have a guest. So we're going to go.